definitely haven't seen the spring that we are anticipating coming into 2025. Some recent headlines: rate cuts stalled for now. TBD what happens in the second half of 2025. Climbing inventory, lower sales volume. These are all a little bit bleak, but let's kind of unpack and...
Slowest start in the past decade was the headline, Denny, from the last real estate board news release that we get in the emails.
That makes sense because I've also seen the headlines of most inventory.
Yeah. It's been a good decade, though, other than this year, other than lately.
Where should we begin? Should we maybe just talk quickly about Bank of Canada? Last meeting was early June. No rate cut. Rates stalled. So there's been the overnight rate now is 2.75. Prime for most banks is 4.95. Typical variable the discount has slowed a little bit. So I think the typical variable rate now is like 0.4, 0.5 off of, or a discount off prime. Fixed rates are still hovering around that 4% mark for 3 and 5 year rates. I just refinanced.
Just to touch on the variable one, you said 0.4, 0.5 off prime.
Discount.
Just in good times, it can get up to like 0.8, 0.9 off prime.
I saw 1.2 in the craziness.
That's great times.
Yeah,
so just
craziness.
put it in perspective for the listener that it's discounted less because of higher risk. And there's lots of factors there, but it's discounted less than it has been in the past as well.
Yeah.
Sorry to interrupt you.
No worries. Fixed rates in and around that 4% range. I just refinanced something at 3.95 for 3 years.
With 3 year, Denny?
A 3 year.
Yeah. What was the difference between a 3 and a 5 roughly? Or did you look at
Almost nothing.
Almost nothing. Yeah. Just teeing yourself up for that better renewal in 3 years?
That was the idea.
That's the gamble. We'll see if it pays off. Carl, let's timestamp this, revisit this conversation in 3 years.
Also, knowing my history of refinancing things, just less time to pay a penalty.
yeah, fair enough. Yeah. And assume you're wrong. Just assume that you're going to do it wrong. So might as well just focus on the penalties.
Next Bank Canada meeting is July 30th. I've definitely heard some people talking about a speculation of another cut this summer, whether it is July or September, the next couple of meetings, and speculation of 1 to 2 cuts this year still.
Yeah.
We'll see if that happens.
Yeah, it depends what they prioritize. I don't know what to expect too. Do you want the market just to continue its turmoil, or do you want to fight inflation?
I know.
I think it's going to take a cut to save this market, but what bad will come with that if they save the market? What's better, saving the market or fighting inflation?
We have the same federal government, but a new prime minister, and one of the first things he's announced our legislation regarding homes and real estate is the first-time buyer GST exemption for new construction up to $1 million. This was talked about by both parties coming into the election and now is a go. So what they've done is remove GST for first-time home buyers on new construction up to $1 million, and then partial exemptions from $1 million to 1.5. Is this going to change anything?
It'll change a lot for a $999,000 townhouse in Coquitlam. That buyer's saving $50,000.
Yeah.
So there's a small segment of the market that it's saving a lot, but will that actually impact all those boxes in the sky that are struggling to sell, the apartments? I think it's helpful. But probably going to be a minimal impact right now. I mean, most transactions are on the resale market. Pre-sales are pretty dead.
Yeah.
Pre-sales need some help. So it is a step in the right direction, I would say. If you're trying to encourage more people buying them, you got to reduce more taxes to make it happen. Obviously in this city, 1.1 million to 1.5 is where most family housing is, and they're not getting a full rebate. Probably I would up the cap and just make it straight no GST a little bit higher to accommodate those people if you're trying to encourage more development there, especially with the small scale multi-unit zoning that we're going to see a lot more of these. Well, a lot of them might be over 1.5 anyway, but I think it's going to have some impact, but it's not going to move the ticker much.
It just seems like all these legislation changes and taxes that have come in the last like 5, 7, 10 years, they're just a year or two late on almost everything, right?
Yeah.
Like
I like this, like the way they're cutting rates.
Pre-sales are
they raised them late and
Yeah.
they're cutting them slower.
Yeah.
But
Pre-sales are completely dead. So if you're trying to spark that market, why is it limited to first-time home buyers only, right? You're talking
Right.
about like
yeah, sorry, I'm
young,
overlooking that
young
part.
families
Totally.
potentially upsizing to newer townhomes. Like most of those people are selling a 1 or 2 bedroom condo. They're not first-time home buyers. So they're not even taking advantage of this. I don't know how many first-time home buyers we have that say, I only want a pre-sale.
You're 100% right. I was just looking at the price point, not that I overlooked the first-time home buyer part.
Yeah.
Yeah, it's going to have minimal impact.
Very minimal.
Yeah. I mean, it's going to help when the first-time home buyers come back to the market, which they already kind of are a little bit.
Yeah.
But they're not buying pre-sales necessarily.
Most first-time home buyers that we meet, they're excited and they want to move. Maybe it's out of mom and dad's house, maybe it's out of a rental, whatever it is, and they don't want to wait 2 or 3 years to move into their first home. They want to buy it and move into it in a month and a half or 2 months, and that eliminates pre-sales. So
I say that, but I've had 2 first-time home buyers buy pre-sales in the last, like,
Is that right?
I don't know, 6, 9 months or so. I think it was mostly around, winter, Christmas or fall. But yeah, there is that segment of first-time home buyers that is just scraping together their deposit and excited about being a future homeowner 4 or 5 years from now, maybe 3 years from now. And they just want to have their name on something. That's kind of the story with these 2 people is they're just, clearly they were young.
yeah,
And, want to be homeowners. And like the idea of being homeowners in 3 to 5 years as opposed to tomorrow, just because of, their situations.
yeah.
But it's a gamble. And then unfortunately right now it's not looking pretty, but a lot can happen in 3 to 5 years in this city. So maybe 3 years from now it will.
Anyone who listens to this podcast knows that I am pro less government intervention. And I find it quite interesting that when they announce taxes that benefit them, such as foreign buyer tax, 15%, they announced that in 2016, August 2016, and that is retroactive or moving backwards for any contract that has been signed that hasn't completed yet.
Yeah.
Versus the GST rebate for first-time home buyers had a start date of the announcement date. It didn't go back in time and say anything that's completing moving forward. Yeah. So it's just interesting to see the way that they implement or remove taxes.
I'm really curious to see what kind of unraveling of taxes and policies they do in the next 5 years or more to bring this market back. I mean, they got the foreign buyer ban. Are they going to lift that? They might have to. And it seems like this is first-time buyers, GST. It's small segment of the market, just GST part. They still have to pay property transfer tax to, in a lot of these price points. There is an exemption up to a certain amount. But, that foreign buyer ban, that announcement, think of it was retroactive. There's a lot that they've done to the foreign investor in the past decade that has kind of burned that foreign investor, whether it's empty homes tax or the ban. There's a wave of investment that came into the city in 2016, around that time, give or take a year. And if I were an investor, from a lot of that was from China, if I were an investor from there and put my money here in 2016 and went through the ringer and say bought on Dunbar and my property's worth less than it was then, and I have empty homes taxes, it's not a place I'd want to reinvest.
Yeah.
So it's going to be interesting to see how we get our street cred back if we are interested in opening our market up to foreigners. But I could see a scenario where it seems like most of their incentives are more around development, new construction. So, it would be probably more tactful to open up new construction, and it may already, is all residential. Like, if a foreign buyer can't just buy anything right now, right? So
not residential.
Whether it's a brand new condo, brand new townhouse, I would see a lot more benefits that we need foreign buyers right now to eat up the condo inventory. Do we need them in resale? It would definitely help resale, but probably don't need a bunch of foreign buyers buying up all the houses, but we definitely need them buying up the condos in Brentwood. That being said, why would you restrict someone? Once you say you can buy this and you can't buy that, it's not, there's some pros and cons to that as well. You could get a weird world where condos go up in prices more than houses. But I don't know what to expect. And I think they're just all in all going to have to unravel some of the some of the things they've done in the last decade that have reduced the buyer supply and also burned the investor. Time will tell.
This is the market update.
Well,
should we just kind of summarize what's going on currently?
I wouldn't mind just going the high level kind of stats that the real estate board, just to kind of, I mean, this is not new news, but May's sales were 18.5% down from last May, year over year. Last May wasn't a great May either. That's 30.5% down from the 10-year average. So the sales volume is still below the 10-year average. It's been that way for quite a while. I can't remember the last month that it was at or above the 10-year average. I don't know if you have that in your memory, but I don't.
It's been a while.
Listings are, year over year listings for May was up 3.9%. So the May that's not bad. Pretty close May over May. But the inventory is up 20, well, basically, May over May listings, 3.9%, but the total listings are up 45.9% over the 10-year average. So yes, May wasn't a big listing month compared to last May. Well, it still was a big listing month, but the total aggregate number of listings is building up. So listings are 45.9% above the 10-year average, and sales are 30.5% below the 10-year average. Not the best picture, not the best market update. So it can only get better from here, right, Denny?
I feel like we've said that a handful of times in the last 6 months.
How would you like to sum that up?
It's really difficult summing that up. I met with a new buyer client yesterday. And of course they want to know, like, is this the bottom? What does the next 6 to 12 months look like? Will prices come down? Will there be more inventory? And it's really hard to predict what that looks like right now. I would say based on what is happening currently, it feels like the next 6 months are going to be pretty slow and steady. There's going to be sales that are happening. The good homes on good streets with good layouts in, those like entry-ish level price points for each neighborhood are going to still sell in a week like they currently are. But for every one that sells in a week, there's probably 20 that are on market for 60 days or longer and reduce their price once or twice or 3 times. It's just a very bizarre market right now. It is very difficult to give people advice on timing, other than sales prices are down 15, 20% more in some areas compared to a couple of years ago. And that seems like a pretty good opportunity to me.
Yeah, there are a few little hotter pockets around this town. Like, I've run into some multiple offer situations for half duplexes and certain entry. It seems like 10% of the listings are getting all the buyers, and then the other 90% are just sitting. I would think that inventory's got to subside a bit. I think when you really do a deep dive on the listings, there's a lot of people dreaming. A lot of people wanting yesterday's price. And I think that there's just going to be a number of sellers that recognize it's just not working. They're causing more harm to their listing by building up those days on market, and they'll start coming off market. Maybe I'm optimistic that will happen, but my hope is that we see some decline in listings in the months ahead instead of it keep getting worse. Because if you're a seller right now, are you really going to jump into the market and want yesterday's price? Well, yeah, we're seeing that all the time, but it's going to be more and more discouraging. We'll do a little deep dive on New Westminster in another episode that we're going to talk about after this, but a lot of listings are sitting. And when listings sit, eventually people get the message, and eventually people just say, you know what, I'm going to wait till next spring. And so there could be a scenario, and I don't think we're going to have low listing inventory in the fall, but I can't just see it. Year over year, this May to last May, this listings were 3.9% up. Maybe June over June and July over July might be around even, or we might start seeing a trend where it's less listings than last year. Maybe not. But the sales data is telling me and telling a lot of people that maybe now's not the time to list unless you need to. I think the people that are listing right now, I think we're in June. May and June is months where everyone wants to try. And I think that's what we're seeing right now. And then as 1 out of 10 of those listings sell in May and June and July, I think in August we'll start seeing more places come off and not come back.
Yeah. Clearly, this is not a year where you are looking to set a record for record sale price in your neighborhood or on your street. But regardless of market conditions, there is someone who can take advantage of what this market currently is. And who's that today?
The buyer that's renting,
Yeah.
the buyer that doesn't have to sell, any buyer that's ready to go. There's opportunities everywhere. When you're looking at list prices, don't think that that's the true value right now. Especially if you're buying anything that's like in abundance. You have, if you find a nice livable turnkey house in say New West or Coquitlam for 1.5 or 1.6, don't expect to lowball it in week one and have success, because that's a pretty active price point for like a 4 or 5 bedroom home in that price range. But the moment that house needs a little bit of a renovation or a busy street or a little overpriced, they don't go. It's a small select few. I see the best deals for the 1-bedroom condos, the 2-bedroom condos that are entry point. The New West, it might be something that's staring at the water on the quay, but very few listings are having success. But when you look at what's selling, it makes sense. It's like, okay, that was a first-time buyer because they got, a 520 square foot 1-bedroom for, 800 a foot. And that was probably sold for 800 a foot 6 years ago. So they're doing pretty good. I don't know what to, I think when I look at the fall market, my crystal ball's broken. It's not giving me signs whether it's going to get better or worse. So I think we're just in for one of those, every month it's going to feel different until the end of this year.
Yeah.
Last October felt like a little bit of a shift towards optimism. We kind of had, a decent October, well, compared to what we saw in the summer. It felt like it was starting to uptick.
Yeah.
Maybe there's a scenario where we get a little jump like that. But this year's surprised all of us. And maybe it could have been more, predictable if Trump got in power and talked about tariffs and scared everybody, and we could have seen this coming. But I guess no one expected that.
Looking at interest rates specifically, we're back to pretty reasonable ranges, like we mentioned, in and around the 4% range. Obviously, that hasn't been enough to spark buyer activity and get people off the fence and eliminate some of those other economical concerns around the world right now. Is there a number that would? Is it?
I think we got to get back to 3. I think
1% more.
Yeah, I think we're 1% high. Look at the payment. A payment on a 4% mortgage at these prices is a lot.
Yeah.
Even payment at 3% at these prices is quite high. But it's I think we're 1% high. I think if we get to the low 3s, I think that'll bring a lot back and help things quite a bit. And I don't necessarily think that the market would go screaming out of control. I still think there's more uncertainty, more talks of job loss, less of a buyer frenzy. Like people in 2021 and 2022 were just buying blindly, money was cheap. Not suggesting we get to under 2% rates, because that might cause that environment again. But if we're at like 3.1, 3.2, I think that'd be a lot more confidence. What do you think?
Yeah, I don't know. I don't know if much would help this year, because a 1% cut this year seems unlikely. So that probably happens over the next 12 months if it does. But I think the rest of this year is just going to be much more of the same. Like if you overprice something by $50,000, it's not going to sell. You may or may not get an offer. If you are on the buy side, these conversations that we're having every single day are just, they're like, well, why would I buy today? There might be more that is better priced tomorrow.
Yeah.
And there's very little urgency. And what amount of rate cuts changes that urgency or significantly increases the buyer pool? Yeah, it's probably 1%. But I just don't think that happens this year. I think Bank Canada's or economists are hinting at 1 to 2 more rate cuts this year, which might be 0.25 or 0.5. And I don't think that changes much of the environment today.
Do you think there's going to be better deals in the fall than there is right now? Or in what?
I don't really see inventory subsiding. That's the problem.
Maybe more, foreclosures? Do you think more distress sales might start? Well, it's such a low percentage. We're talking about the amount of distress sales that make it to a foreclosure right now is minimal.
Yeah.
And the amount of distress sales that don't make it to foreclosure that's on the market is still pretty low. Like, I guess if we're talking about someone taking a big hit, but they do happen.
Yeah.
I think a condo that sold for $650 last summer, maybe it's $625 today. Maybe you might get someone that's desperate and you get it for $6, but I don't think that's going to go to. I don't think what $650 was last summer is going to get to $550 in any time. I think that it's kind of. To me, it feels like it's bottoming out now, and maybe hard to say. I don't really like saying the market's bottoming out in a June.
Yeah.
So maybe there is, if it still has this sentiment, maybe there's August or some fall moments that have a blip that feel worse. But when it feels worse, I think people just come off market and wait for the next spring. I think there's a very small, there's a percentage of people that are feeling it and have to sell and in terrible situations. But I think most of the listings out there are just opportunistic, don't have to sell. They'll just come off if they don't have success.
Yeah.
Yeah.
So much of our market in Greater Vancouver is this buy and sell at the same time, this upsizer type person that we work with. And a lot of those people right now are electing to sell first. And when you sell first, you have very little anxiety in a lot of cases of like, what if it doesn't sell? In previous markets in 2021, when the common trend was to purchase first and list your place right away, you're kind of forced to sell and take what a reasonable buyer would give you. And right now, a lot of people are electing to list first, which minimizes their stress and opens the timeline to, well, if it sells in 30 days, great. If it takes a year, so be it. And a lot of people are just sitting at list prices. Whenever we're evaluating properties, we're giving a range of list price and saying like, here's where we think market value is. Here's where our suggested list price. But, $50K higher would be in a reasonable range and it might work. And a lot of people are electing to take the might work list price because they're selling first and don't feel the stress.
Yeah. And then I think the one thing I'm saying more now than I have it before is, the difference, if you could price it at $749 or $725, I mean, I think $725 is more appropriate for this market, but let's be honest, there may be no buyers for either price point right now.
Totally.
There may be no buyers in the next 30 days. There's no data showing me that there's a buyer last month.
Yeah.
So, those are it's tough times. I mean, I think all in all, market sentiment right now is great buying opportunities. Yeah. Sellers don't give up, but if there's a reason to move, like downsize or upsize or relocate, it's tough, but especially for upsizing, great market upsize. Downsizing, maybe. Relocating, well, tough time. I hope you're buying. I hope there's good deals in the market you're going to, because it's not a market where you opportunistically want to sell. It's a market where you kind of want to sell with a purpose, and I think I'm hoping next spring is better. I'm hoping this fall improves. Yeah. But right now, I have no signs or indication telling me that's going to happen.
There is still a bit of a disconnect. I remember we talked about this maybe 6 months ago, a disconnect between buyers and sellers. Sellers wanting these prices from yesterday and seeing interest rates on the way down and assuming that values were going to climb this year. And buyers seeing more inventory piling up and wanting a lower price than yesterday's price. And there was this disconnect between people through negotiations, and that hasn't gone away. Even just yesterday. It's funny. Realtors in slow environments, there are a little bit more emotion comes into it when your sales volume goes down 50% from a year ago. You're a little bit more hungry for that deal to come together. And through the negotiations, we can feel that right now. I don't know if you're similar, but
yeah. You got a buyer?
Yeah. I had a conversation yesterday on one of our listings with someone, and his response was, well, the seller just has to be more reasonable. The reality of it is the seller can do whatever they want, right? Yeah. This just might not be the home that you purchase, but if you really love it, you're going to have to negotiate a little bit more. But a lot of people are just throwing these low numbers out and almost getting annoyed and pissed off that a seller is just saying pound sand or here's a counter, but it's close to list price. You have to understand, like we just kind of talked about, a lot of these sellers are electing to sell first, and the pressure to sell is pretty minimal. And I'd say, like, what percentage of the market is that? 75% maybe? Yeah. So yes, there are deals out there, but it's not on every single listing that comes up. And you can't just assume that because someone is listed for sale that they're willing to take $100K less than what a unit in their building sold for a month and a half ago.
I got one more question for you before we wrap this up.
Okay.
What do you think is going to be the most common headline for real estate news in the next couple months? Or what do you think a prominent headline will be? Like, do you think I mean, I have my...
The obvious ones are just like comparing inventory to sales volume, and like May sales volume was down even from last year's. I think it was 17.5%, and below the 10-year average, I think you said 33%.
Yeah, it's still 30 and a half. Yeah.
30 and a half. Yeah. Okay. I think there will be something around market crash or market falling because of sales numbers that are happening. Like the sales values are going to be below what they were in February and March. So like the trend is probably slightly on the way down. And so I would say something around with the words crash or values coming down.
You think you're going to hear any more developers going under?
Oh yeah, big time.
Good.
Big time.
Those good headlines.
I would be extremely surprised if that wasn't a big story over the next 2 or 3 years.
Yeah. So just more broad macro talk, sales volume down, prices down, new developer goes under. That's going to be the headlines for the months ahead.
Can we let's talk a little bit about that. This is our podcast.
We
get to decide what the topics
slow
are.
wrap up here, guys. Slow wrap.
Market update / 5 other things. Yeah. I had a conversation with a client friend yesterday who's in that development world. And I mean, he's pretty well connected to politicians, both provincially and federally, talking about housing and incentives and all that kind of stuff. Also talk in like communication with big developers. And one of my questions to him was, with all of this turmoil happening with, developers, tons and tons of developers are putting projects on hold indefinitely just because the numbers don't make any sense. Construction costs are too high. The value of what they're going to pre-sell these condos at is way lower than it was in the last couple of years, but also just the certainty of selling a project out is bleak. Like you may price 20% below what pre-sales were happening at a year and a half, 2 years ago, and you still may only sell 10% of the project in the first year. So one of my questions to him was, are a lot of developers hurting and feeling over leveraged? And his response was, you will see some really big names go out of business and go bankrupt in the next year or two. And so my further question to that was, what happens to all the land that they own? And he says, it goes into receivership. I say, well, isn't that a really good opportunity for other developers who maybe have some cash or are not as over leveraged, like maybe the really big guys, to just pick up land at 50 cents on the dollar? And he said, in theory, that sounds good. He's like, there are multiple pieces of land that have been assembled that were purchased. He just gave some approximate numbers of like for 150 million that will come up for sale for 90 million. And in theory, that sounds like a good number. But there's still so much uncertainty of what you can sell a project out for that even at a 50% discount or whatever that is, 40% discount, the numbers are still so uncertain and the sellout is so uncertain. And most of these, even the big developers, don't have the cash because they're kind of locked into land and current projects that a lot of them just won't even turn over. So I think, he has a lot more information on that side of the industry than we do, but just hearing that from someone who's pretty well connected in the development world, it wasn't positive in any way.
Oh, I've heard stories where projects wouldn't even pencil out if the land was free, or at least it would be not a very profitable one, right? And that just shows how high our construction costs are and the uncertainty. But I think the value of land is going to be an interesting thing to watch over the years ahead, because that's really the number one thing that these GST exemptions, that the government needs to stir interest in new construction to kind of save a big part of Canada's industry and Vancouver's industry.
Yeah. One of the things I wanted to ask you on that topic of developers and pre-sales is the pre-sale market dead? Like what we know of it. So like, let's say the last decade, maybe 15 years, it's been very common for developers to build smaller and smaller and smaller units that were heavily investor focused. And they would launch a project and there would be lineups and they'd sell 75% of the project in the first 3-6 weeks. And then the next project would come up and push the price per square foot slightly, and then the next one would come up and it would be even higher price per square foot. And I mean, you can kind of ballpark a new development around Metrotown or Brentwood and Burnaby. What percentage of it was investor purchased? 70%?
Seemed like it.
High.
Yeah.
Is that dead?
I mean, it's dead if they don't make changes. If they open up foreign buyers, if they keep GST exempt, well, if they improve GST exemptions, if I don't think it's dead, but I think, this is we're in it. We're in the worst of it. Especially with Toronto's news headlines, I think what we're seeing over here is probably minimal compared to that. But there's a lot of history of condos in the city. And I guess we've seen a small percentage of history. We're in a real tough time and we're kind of comparing a market in the last 10, 15 years. But if you look at like the building landscape of New Westminster, there's gaps where there wasn't much developed. There's 10-year periods, 5 years periods where like the New West Quay was all developed a lot in the 80s and 90s. And then there was a lull of development probably from like the mid 90s to mid 2000s. And just because that's a long time ago, before I was licensed, before you were licensed, there's probably been moments of history that we're in now. This might seem really severe, but there's been lulls of development in this city. There's been moments where there hasn't been much built. And I think what this is going to do is we're going to have very few project starts. We're going to have a gap of supply for a few years in the future. And that might cause different problems. That might improve the market. It might cause prices to jump and more affordability talk. Yeah. But I think what we're just teeing ourselves up for is a lull of development that the city's probably seen in the past. But I don't know, at the scale of new condos that have been getting developed, I think this is the biggest one. Obviously, when I'm talking about mid-90s to say mid-2000s in New West, we're talking about, okay, they maybe built a couple buildings, but Brentwood, Lougheed, Metrotown, these are 20 to 40 tower little villages that are in the works. And when massive projects and communities of thousands of units just decide to stop and hold, I think that's much bigger scale than what they saw in the 90s or early 2000s, or if there was a lull in the 70s or 80s that we don't know of. Yeah. So we're in a lull. This is going to affect supply in the future, but it's going to affect supply in the future for apartments in the sky in these towers, which is probably the best thing to affect supply for right now. They need some help right now. And then if the supply dries up, then that might in turn cause future prices to go up, which might in turn cause future developments to happen. Yeah. So time will tell.
Most of what those investors went after in pre-sales over the last 15 years was like the small one-bedroom condos that worst case scenario, if you can't assign and you don't make money in the 3 years that the construction's being built, you rent it out and the cash flow looks better. Do you think these projects that come up over the next 3 to 5 years, do you think the product offering is shifted to more end user?
I think they'll sell more 2 bedrooms than 3 bedrooms if they're priced closer to resale prices. Yeah. Like 15 years ago or 10 years ago, or maybe not 10 years ago, but a long time ago, it'd be new construction wasn't much of a premium on top of new existing. And now the price of a new, like the price per foot is quite high. So a lot of, end users aren't, let's say in New West, like the Pure West, there's not a lot of $1 million 2-bedroom buyers or $1.2 million 3-bedroom condo buyers. So there's just no buyers for that, or very few. So there's just more buyers for 1-bedrooms because if you're going to buy something that's built in 4 years, it's probably more of an investment to say I'm going to move into it. Yeah. Obviously, there's exceptions to that, but I don't see. I don't know what incentives and what would have to happen to really encourage end users to buy pre-sale 2 and 3-bedroom condos. And at the same time, you don't want to see a city full of studio and 1-bedroom towers.
The other thing I was going to ask you is, do you think naturally there's just a ceiling of where a pre-sale could get to in terms of price per square foot? Like I look at Bitcoin, for example, and as it approached 100K, everyone sold it off and then it dropped to like 80K right away. And then I did it again. I don't know. I did it like a few times. And let's talk about Burnaby specifically, because we're talking about like Metrotown and Brentwood, where there's been a ton of development. But maybe 3 years ago, we saw it getting up into like the $1,400 to $1,500 a square foot kind of range. And that's when people were just assuming that they would buy a new construction, and in 3, 4, or 5 years when these were built, they would be able to sell it at $1,800 a foot. They would just keep climbing and keep climbing. Over the last couple of years, we've seen that pre-sale stuff come down from $1,400 a foot to $1,200 a foot. And even at $1,200 a foot, people aren't buying it. Is there just like a natural ceiling? And yes, maybe in 30 years from now, that ceiling is going to be higher than it is today. But is that like a short-term ceiling of the, let's say, $1,400 to $1,500 a foot in Burnaby? That just will be really difficult to crack.
I think this is a little side answer to your question here. You're talking about in Canadian funds.
Sure.
Money has been getting devalued over time. So I think when we're talking about 1,500 foot, sounds astronomical, but the reality is like 1,500 a foot 5 years ago isn't what 1,500 a foot is today. And if we were talking about buying these condos in gold, I would say that, yeah, there's probably a cap. I mean, someone's going to pay only like 1 bar of gold for this type of condo, right? But I just took as you were chatting, I took a little just brief glimpse at gold price history, and I'm just going to, don't hold me to this, but let's say 25 years ago, gold was half the price it is today. So our price per square foot is maybe, let's just say it's around the same. In some areas, it's probably a little bit higher, but let's say it's the same as 5 years ago. So if our price per square foot is the same as 5 years ago in Canadian funds, but it takes half the gold to buy it today that it did 5 years ago, I mean, we're just talking in currency that's losing value. So I think what I was kind of just pondering is, if everyone's getting paid in gold pebbles and gold bars, like, I actually think people are getting paid less nowadays to build a house, to buy a house, than they did in the past in certain moments. Like, I don't think our prices, I mean, this is a whole other episode to it, paying for real estate in gold, but if we were talking about gold, we'd have a completely different conversation. You know, the prices would look way worse. If you're talking about, I bought this house for 1 bar 5 years ago, and now it's half a bar today, I mean, that would look terrible, right? Yeah. So, I could see a world where our prices go up to $1,900 a foot, but I also think in that world, our dollar is devalued further. So that's another, who knows? I don't know.
So your suggestion is buy gold and Bitcoin?
So my suggestion is there's no cap in Canadian funds, but I think in terms of gold, I don't think like a house that was a bar before is going to be 3 bars tomorrow. I think if you took on like a non-inflationary product, that's more of like a hedge that's trusted as much as say gold was. Yeah, I don't think they can make. Yeah, no. Like I don't think it would. I think there would be a cap in gold, but in Canadian funds, no, it could be $2,500 a foot one day.
Yeah. Good point.
Yeah.
Shall we wrap up?
Yeah, let's wrap that one up. Thanks for tuning in this long if you made it that far.